Welcome back to another video, guys. So this is the second part of the buy and hold series that I'm doing. There are total 4 parts, but to understand this better, you'll have to watch the first video, which was a masterclass in buy and hold. I'll link all those video up here, and I'll also post the thumbnail of the video so that you can clearly point out and click on the relevant video out of all the thumbnails. So in the first part, we discussed the first 10 stocks out of these 40 stocks. For those of you who are new on this channel, these were the first 40 stocks I had shortlisted in the March-April cycle when the market were not doing well. And one similar list I've done in October, November also. You'll have to go back and check in the November video where I'd scrolled through a trading view list. You can easily see it. I'll also put it out in an Excel format. And those names I'll only discuss maybe in February or March, so that there is a lag between when the list was shared and the stock movement. It is just something I'll have to do based on the regulations set by SEBI. So in the first episode, I explained how I shortlisted the first 10 stocks, that is from Aditya Birla Capital to something like GSPL. So the link of the first video is also given in the comment section. I've also linked it up here. It will also come at the end of this particular video. So in this video, I'll be taking up the next 10 names. So HAL, KEI, Kosar Brothers, Kosar Electric, Kosar Oil, KNR Construction, KPI Green, KPIT, that is from the information technology sector, Lambodra Textiles, and Likhita Infrastructure. One thing you got to note about these 40 names is how diversified they are. If you try and map out this list into various sectors and subsectors, that is industries, you would know that this list captures almost every subsector that is there in the market. Of course, no list can capture all, but at least 80% or 75% this list captures. And same with the current list that I'm still building. So within this particular list, the worst performers were KNR Construction at 4.72%, Likhita Infrastructure at 4.33%, and Lambodra Textiles at negative 11%. Rest of the names, that is 7 names, clearly outperformed Nifty. The best performing names were Kosar Brothers at 127%, KPI Green at 126%, KPIT at 72%, KEI at 56%, HAL at 50%, and then Kosar Oil was at 40% and Kosar Electric was at 26%. So in the next 2 parts, I'll be discussing these 20 names again to explain how I shortlist these stocks and which are the specific patterns and how you need to link this with a lot of teachings that you study in the books. So the first name I'll pick up is HAL. So this is after the stock split. So when I had picked it up, it was at 2800. Then the split happened somewhere here. So this is a split adjusted chart. So again, this is a beautiful contraction. Here I have a relative strength line. This RS line is nothing but the difference of stock price against Nifty 500 on Nifty. This is a ratio line. Why I've put out a ratio chart this time and not in the first video, you'll understand towards the end of the video. So this is a contraction. All right. In May, this stock was breaking out last week of April. The first breakout attempt actually happened here in the month of March, early first week of March. And if you look at the candle, really strong candle, wide range, a good amount of volumes were also there. And this is when this stock caught my attention. The thing was, in the first week of March, Nifty 500, the broader market was just not doing well. In fact, broader market was falling. Nifty was consistently making a lower high, lower low structure. And in such cases, even if I want to go behind any stock, I do so with really reduced position size. So this is where, the stock really kind of caught my attention because by last week of April, Nifty had started bottoming out, doing well. Nifty 500, small and mid cap index was staging a breakout. So that is the reason I went behind this particular stock. And of course, defense sector has been a strong theme I've spoken about defense sector, elaborately in many of my videos. I also did one detailed video about defense sector in July or August 2022. That is 6 months before this particular stock. And this stock actually, along with Masgao, all those shipping stocks, defense stocks, I'd actually spoken about way back in June 2022 as a theme. I always talk about themes in stock market. So defense theme is here to stay for the next 10, 15, 20 years at least. In between, you'll get massive corrections. Make use of that opportunity. Obviously, stock names, you'll have to decide which ones you want to go behind. I can only point out to which themes will do well in years to come. So this was a beautiful structure. Again, in October, November, when the markets were falling, this is nothing but, again, a stage structure developing on the chart, and then a fresh move. And today the stock is at 2,335. I'll speak more about this in the second section of this video. The next stock I'll see is KEI Industries. For those of you who have read the teachings of William O'Neill, this is nothing but stage upon stage, or a base upon base structure, and then a breakout. So these are very simple patterns. If you want a list of which patterns I trade in the market, it is cup and handle. It is Mark Minervini's volatility contraction. Although my VCP charts look very different because it's difficult to get textbook patterns as Mark has shown in his beautiful books. I also trade the Richard Wyckoff stage 1, stage 2, stage 3 breakout. Again, I'll link up all these video in the comment section. Go through the comment section, please. Mainly because I reply to all the comments. Last week comments have also been answered, and see what other traders are facing as problems in their trading career, and read my replies. More than the video, I'll tell you, comment section is more important because that is where a lot of common people like you ask their doubts, and sometimes those doubts seem really basic, but those doubts really matter in improving your overall understanding of the market and how you would execute trades. So this is nothing but a stage upon stage structure. Again, it's a variation of it because typically a stage upon stage will have a stage in this region, not overlapping. But again, stock market is all about adaptation. A nice breakout, the volumes were good, nice wide range candle, and the stock today sits at 28.17. Again, this is one more stage that formed and a breakout. The next stock was Kosar Brothers. Again, a beautiful contraction. Can you see this is similar to HAL? Can you see this? So this is something you'll see in my charts, that I go behind very defined limited patterns that I understand. I'm not interested in capturing every single movement that happens in the stock market. I'm happy to miss out. I'm happy to be late. I'm happy to underperform for a while, but I only go behind those structures. I only go behind things that I understand, or things that appeal to me the most. So that is why if you and I sit on the screen and go through a list, your selection will be completely different from mine, because technically that is how things work out. So this was again in the first week of April, breaking out a strong candle here, confirming the trend, and then, as they say, rest is history. And this is one more base that is getting formed. Can you see a similar kind of contraction is happening here? In between, stocks can fall a lot. You can adjust your positions, exit 50%, re-enter 50%. Again, those kind of adjustments every trader can do based on his risk profile. So this was again a massive winner. Kirloskar Electric, it's moved up just 25%, but in hindsight, if I have to look at the chart, then this particular contraction could have been better. The reason why I went behind Kirloskar Electric, because I saw that at the same time the breakout that was happening in Kirloskar Electric, there was also movement in Kosar Brothers and Kirloskar Oil. So this is group movement. Again, if you've been regular on this channel, when M&M, that is the automobile stock, was breaking out, I did ask you to look at Mahindra & Mahindra Resort, Mahindra Financial Services, because generally what happens when a group starts doing well, most of the stocks of those groups starts rising. Again, this is something you just pick up with experience in the market. So that is why I went behind Kirloskar Electric also. It hasn't done that well, but 25% is not a bad return when Nifty actually has not moved that much in the same period. The next structure was Kirloskar oil engine. Again, can you see the similarity? This is stage upon stage. Can you see? Stage upon stage. So after this breakout, you see a lot of people coming in, then they keep getting frustrated. And these are three simultaneous stages forming on the chart. Again, can you see how similar this is to this particular structure? So that is one thing you'll see in my charts. All similar structures, all similar patterns, and I just keep repeating this. So this is again been a really strong kind of a stock. The next is KNR Construction. Now this was a disappointment. I would tell you I was really optimistic about this structure because it was a structure that was coming on back of a flag, nice sort of movement, some really long tail candles, bullish engulfing here. I just thought this is going to be a winner because I was looking at the realty index, and realty index was also doing very well. I was really optimistic about this particular counter. But the day I bought it, from that day itself, this stock actually did nothing. And it kept frustrating me, it kept underperforming. And yes, I made some adjustments, but in this series I'm talking about holding positions, So sometimes when you buy a stock, it will happen that the stock won't perform for a long period of time. And even now, if you see, after so many months, this stock is at 291. The buy price was triggered at 281. So just some 10 odd rupees. So I was optimistic. My gut was telling me today when I look back at my notes, my gut was telling me this is going to be a massive winner. But actually, this turned out to be one of the most underperforming stocks that I had analyzed. KPI Green Energy. Again, guys, look at this chart. I'll flip few charts. So look at this KPI Green chart. Look at this particular chart. Look at this particular chart. Can you see the similarity? So that is what I'm talking about. These are same structures that keep repeating again and again. So even in KPI Green, if you see, this was 500 odd levels. Today it's at 1160. Can you again see a contraction? A long-term contraction, then a breakout. So these are again similar structures that keep repeating. And this is also again a lesson for you as to why you should not, leave your names that you selected few months back out of your watch list. Those names always have to be in your watch list. Mainly the names that really perform well, because those are proven structures. Those are structures that have done well, and those are structures that will again set up for you. Just because a stock is not working, or just because a stock hit a stop loss, or just because the stock is not giving you return, does not mean it is not going to move in the next few months. So always track your winners and always keep them in your watch list. So KPIT again, can you see same kind of contraction? Nice amount of breakout. I remember at this particular candle, I had made a note that the thing that I like in this structure is that despite of this wide range candle, market has again started moving up. So this is one note I had released, and then during this time IT was completely out of favor. People were not talking about IT sector at all, and then KPIT turned out to be a really strong stock. I do remember making some adjustment, I think when this happened or when this happened, something I did, but then later on I again added back. So this has again been a really strong stock. Again, similar kind of pattern. The next stock is Lambotra Textile. Again, can you see it's a similar structure of HAL, of Kosar Brothers and those kind of names. And this was again one name that I was so bullish about. I was so bullish about because this particular stock was forming a beautiful contraction. And the breakout candle that you see, the breakout candle was fantastic. And I just felt that this particular stock would be really, a strong stock because it belonged to a sector and a sub-industry, that is textile sector, that was doing exceptionally well. And for some reason, after this breakout, things didn't work out. It did not have great kind of numbers, but let me tell you, when I'm picking out stocks through patterns, I generally don't go down and study the fundamentals that much. When a stock starts moving in my favor, when a stock starts moving in the direction of the trend that I anticipate, only then I start going and I check the numbers in details, and then I make some detailed notes about it. Else I just let it go. and initial pick of mine is always based on patterns, and then I study. So this was a huge disappointment because I'd seriously felt this stock would do very, very well. The next counter is Likhita Infrastructure. Again, can you see the same structure? So this stock is just about 4% higher. But when this breakout happened, this is very similar to the stocks I've picked up. Look at this. It's almost same, right? So this was again one disappointment. I did think Likhita Infrastructure had, the numbers were okay. And at that time, infrastructure index was also breaking out. So I was definitely positive about this particular counter. And I had felt that there was some strong momentum that can come in this counter, but at end of the day, it did not work out. These things happen. So now I'll read something from the teachings of William O'Neill. Again, this clipping is from Investor Business Daily newspaper. I do have subscription of it and I do read it on a daily basis. Relative strength is a powerful friend in a new rally. Now, I'll just take you through this chart. Okay, this is a bar kind of a price. This is not a candlestick. This is a bar chart. I generally don't use bar chart, but Investor Business Daily, William O'Neill used to use it. So we'll just go through it. When it comes to profit potential, not all stocks are created equal. Invariably, there are a few big winners that make difference in your portfolio and then everything else. Relative strength is the key to winners. ZS, which is the symbol of this particular stock, that is called Scalar, I think, is among the stocks that immediately stuck out on the recent follow-through day, but going back just a couple of months, why it deserved a prime spot on the watch list. On August 29th, so at this particular point, they're saying that the stock had a follow-through, just moving above 50 DMA. Look at the relative strength line. All right, at this particular point, line was beginning to move up. Then look at point 2. At point 2, relative strength is staging a fresh breakout. You get a retracement to point 3. Look at relative strength line. This price is much closer to this particular point, but look at RS line. It is not close to this particular point, which means stock has been outperforming when the markets have been pulling back. And then as candles 4, 5, 6, 7 print, again a strong kind of long tail candle, look at how relative strength shapes up. So what you can do is you can pause the video and read all of this. I don't want to completely repeat it. I've just given a summary of it. For those of you who are interested, just pause the video here and just see. But I'll just read a couple of important kind of a point. The relative strength line is one of the most important things to watch in a new rally. Why? Because relative strength tells you which stocks are falling less, which stocks are outperforming the broader market. And that holds huge advantage when it comes to picking up the next winners in the market. The relative strength line was poised to clear recent highs well before price. This means if RS line is breaking out much before the price breakout happens, it tells you that the stock is so strong that relative strength is continuing to make higher high and higher low. And if the market stabilize, then these are the stocks that will rally first as the markets tend to bottom out. So as a trader, now I'll go back to all the charts again to show you one common element in the stocks that I've picked up. Look at HAL. By the time I picked up, because this move has happened, if I could just scroll the chart to this particular point here, you can clearly see that relative strength line was on the upside. Look at this when I'm picking KEI. Look at the RS line, clearly trending up. Look at Kosar Brothers. Look at where the RS line was at Feb, and when I picked it up, look at here. It was at new kind of a swing high. Look at Kosar Electric. Look at the relative strength line when I picked it up. Again, Kosar Oil Engine. This particular Feb was the reference because this is where we are seeing when this particular stage was forming, relative strength line was still above this particular point here. Look at this line, KNR Construction. Again, look at the prior trend. So when this particular stock I picked out, the relative strength line was beautiful. Yes, it did not work out because everything in markets are not going to work out every time. But just look at the strength here. Then the next chart is KPI green. This breakout, because this move has happened so much, you cannot see, but if you come back to February and see where I picked the chart, this is 0.03, this is roughly 0.025. Again, RS was clearly kind of sloping up. So just open trading view and go back to this spot. You'll clearly see that because the movement has happened so much, I should have opted for log charts. Again, look at the prior relative strength trend when this particular breakout is happening, and then stock again started moving up. In Lambodra also, look at this particular candle and look at the RS line. It was already trending up. Next chart is Likhita. Yes, it did not work out, but look at the relative strength trend. So I hope you get the idea behind it. Whenever you are seeing a stock that has strong relative strength and it is showing the patterns that you're interested in, always keep that up on your watch list, because those can be massive winners in your trading. It is just a matter of time before those stocks break out. The problem with I won't say today's kind of a trader or this generation of trader, that is a bit of a loose statement to make, but the problem with the current kind of mistakes that most traders make is being too short term and too impatient. So when they want to see a VCP breakout, they want to see this stock kind of taking off. Why? Because you start to do mental calculations. Your 2 lakh is becoming 6 is becoming 12 is becoming 18, those kind of things. But the truth is, it takes a lot of time. If you look at this particular performance of this sheet that I shortlisted in March, April, largely this was done by first or second week of April. Today is what? December. It has taken April, May, June, July, August, September, October, November, December, 9 months. It has taken 9 months for these stocks to perform. So that level of patience, if you don't have, then there are two things that will happen. Number one, you'll keep making mistakes. Number two, you will go to FNO and options and those kind of things, because their movement is so quick. An option can go from 20 to 100 in a day, and 100 to 20 again back in the same day. So if you have that disease of seeing quick movement on charts, then right away tell your money goodbye, because that money is going to go away. If not today, few months down the line. But if you have the patience to sit through structures, carefully construct watch list, carefully see which stocks are performing, and then adding to those names. So if somebody is buying HUL here, don't you think that person would be adding again here? Don't you think that person will be again adding here? The same examples. The person who's buying KEI here, don't you think he'll again add here, or at this particular point, or at this particular point? This is called pyramiding. This is called adding to your winners. Again, Kosar Brothers. Do you think this is the only scaling a person will do? He'll add here. He'll again add here. He'll try and add here. And if we see one more breakout here, he'll again add something at 1050. Why? Because you gradually add to your winners and you quickly cut your losses and reallocate the money to names that might perform in the future. That is the whole kind of essence of stock market trading. So last week, the episode that I covered was about simple structures. All right. So this week, if you see, in that particular structure, I was explaining about pivots and those kind of things. And this week, I have added a relative strength to it because this is one of my most important tools that I use to assess whether a stock is outperforming, underperforming, and whether that particular stock deserves any kind of allocation at my end. So I've just linked up all the relevant videos that you need to go through, even in the comment section, even in the screen that is coming up in front of you. Do watch it in sequence. It'll definitely be worth your time. So have a great weekend ahead, guys. Take care and be safe.